Hey guys, it's your boy Jay Kabata back here with another video. This one's going to be a little bit of a short one, but basically I'm going to be talking about one of the most important things that you need to do or have if you're going to be invested in the stock market. Alright, let's get into it. So I believe one of the most important things if you're going to invest in the stock market is going to be your mindset. Having a bad mindset or not being able to control your emotions while being invested in the stock market can lead to bad decisions, which in turn makes you lose money. So one of the first things that I want to get into is that your mindset needs to be long-term. You don't need to worry about day trading. And if your mindset is long-term, then you're not going to worry about losing money. Especially if you have that emergency fund that I've talked about in previous videos, then you're not going to need to worry about when the market crashes down because you're going to have money on the side to pay for whatever you need to in your life. The reason mindset is so important is because the market is going to go down eventually. So one of the worst things that you can do when the market goes down is panic sell. Panic selling is basically that if you already have gains or if you're starting to lose money, that you're going to sell that stock because you don't want to lose more money on it. Now the reason that this is bad is because if you're invested in a good company, over time history has showed that the stock is going to go back up. So you're going to pull out, you're going to hope that it goes down. But if you didn't buy at the bottom or if you sold at the wrong time, then the stock's going to start to go back up. You're going to put your money in there again and you're getting the stock for a higher price. The mindset needs to be that if you see this going down, you need to see that as a sale. If you go to a dealership and there's a car that's usually $20,000 and they're selling that car for $15,000, you're not going to be upset and you're not going to not want to buy it because it's cheaper. You're going to be happy and want to buy it. So you need to look at it the same way in stocks. One of the best things that you can do is buy stocks at a lower price. Of course, I'm talking about good stocks, okay? You don't want to get into penny stocks where they're dropping down and like they might be going out of business. But for example, if Apple was $100 and then a recession comes and now it's 70, 60, or 50, like you want to start to buy that because Apple is a good established company that's going to start to grow again anyway, or they're going to come out with products that are going to be beneficial. So the main thing here is that you just need to see it as a positive. If you bought Apple at 80 and now it's 50, then you just want to buy it more every time you get paid so that you're able to get those long-term gains over time. Now I know this can be easier said than done because like in the situation that's going on right now, people have lost their jobs and they're starting to touch from their savings or from their portfolios to pay for the things that are needed, such as their rent, food, and other items. But if you build that emergency fund that I've talked about that can last you 3 to 6 months, then you won't need a touch from your portfolio. And if you just find another part-time job, for example, with the whole situation going on, there have been people who lost their jobs, but there have also been a lot of companies that have been hiring a lot, such as Amazon. And although Amazon might not pay you as much as your other job did before, that's still going to help you pay your bills and keep on top of it, so at least you won't need to take out from your portfolio. So as long as you have this emergency fund, and if your mindset's right, then when the market's going down, you won't need to pull out from there, and you're going to try to invest as much as possible. There's that saying that the rich get richer, and the reason that is because they get happy when the market crashes because they have all that money on the sidelines that they're going to buy when everything's cheap. As I use the example, if Apple's $50 now and it was $100, that's 50% off. So now they're putting in all their money in there. And if they just wait it out, like in the next 2 to 3 years, let's say Apple goes back up to 80 or even passes what it was. Let's say it goes up to 120. Now they made a huge profit because they weren't scared and they knew when to capitalize. As I said, mindset is one of the most important things. Mindset can easily make you lose money or lose on a lot of opportunity gains. As I always say, you need to reinvest regularly. If you get paid every 2 weeks or if you can only do it once a month, then that's fine. But as long as you're doing it consistently, you don't need to worry about that. If the market goes down, you should be happy. Start putting in as much as you can. Try to put in, if anything, even a little bit more. Don't be scared. The prices are down. It's a sale. Over time, you're going to make an even bigger profit if you were buying all those stocks at an all-time low. If there's one thing that you guys take away from this video, there's been a lot of talk of a recession. No one knows when a recession is going to come. Is it going to be at the end of this year? Is it going to be when the election comes? Is it going to be at the beginning of next year? The number one thing that I can say is do not sell your stocks unless you absolutely need to. If you sell those stocks, I promise you it's going to affect you negatively more than it will positively. Of course, I can't speak for everyone. You never know what you need to pay. If you need to pay for your house, then obviously that's going to be more important than keeping money inside your portfolio. That's going to be all for today's video, guys. I know it was a short one. I just wanted to give you guys a quick short video, especially with all this talk that no one really knows when the market's going to go up or down. The market has been going up, but there have been some days where the market does go down, and I know like a lot of you guys have messaged me and you guys are asking me like, do I think is the market going to go up or down? If you guys have the right mindset, I promise you the market going up and down is not going to matter. At the end of the day, we should all want the market to go down, because then we're going to put in money and we're going to come out superior in the next couple years. Be sure to like, subscribe, and leave a comment down below. I appreciate all the support you guys have given me. I'm going to leave my Robinhood link down below in the description. Be sure to click that and get started investing. You'll get a free stock. And as I always say, you guys can message me at JKabata if you guys have any questions. I do respond to everyone, and I'm trying to help everyone as much as I can. Until next time, guys.